Hi, everyone. Welcome to Be Different for Success. Today, we'll be talking about 3 best stocks to buy for long term. Before we start today, we have a quote for you. Risk comes from not knowing what you are doing. That is a quote from Warren Buffett. This quote, I would say, generally applies to life. It means that we should always be aware of the decisions that we make. Everyone is probably aware that money grows over time through investment. It is a risk, but there is what we call a calculated risk. And in relation to the quote, as long as you are aware of what you are doing, you are making your research, then it's a risk worth risking for. As you have probably found out the hard way, there is no real thing as getting rich overnight. Too many people out there are offering ridiculous ideas on how to be rich, and it's crazy how many people still fall into get-rich-quick traps. I get it, you want to be rich. Who doesn't? But there's a lot more to that. It has to be hard work combined with knowledge and consistency. All ingredients to make you realize that investing in top stocks over the long term can help you achieve financial freedom in the long run. Today, let me explain to you the 3 stocks that look like great candidates to make investors wealthy. This includes Clean Energy Fuels, NIO, and Intuitive Surgical. Here's why they look like a good buy. A beaten-down renewable. After news networks called the election in President-elect Joe Biden's favor, shares of many renewable energy stocks soared. It includes shares of natural gas fuel specialist Clean Energy Fuels. The company's primary business is selling natural gas fuel to trucks that have been specifically outfitted to run on natural gas. Because natural gas is cheaper and cleaner burning than oil, many companies have opted to convert their truck fleets from diesel to natural gas, which can save money and reduce emissions. You might point out that even though natural gas may be cleaner than oil, it's still a fossil fuel. That's true, but clean energy is still renewable natural gas by virtue of its hottest product, Redeem, a biofuel that's made from renewable natural gas. To make Redeem, Clean Energy collects methane, a potent greenhouse gas, from sources like farms, dairies, and landfills, then processes it into usable fuel. When methane is burned, it is turned into carbon dioxide, a much less potent greenhouse gas. So, using Redeem actually helps mitigate greenhouse gas emissions. Redeem has supercharged Clean Energy's operations. According to CEO Andrew Littlefair on the most recent third-quarter earnings call, Redeem has grown to more than 60% of Clean Energy's overall fuel mix. Littlefair has set a goal of transitioning the company's fueling infrastructure entirely to Redeem by 2025. Clean Energy stock has risen more than 90% so far this year, but its current share price is nowhere near its all-time high of about $24 per share. Even electric car ownership surges, methane emissions from farms, dairies, and landfills will still be a problem. Clean Energy looks poised to provide the solution and make investors succeed in the process, as it yields an economic return of 3 to 8 times higher than the initial investment. How about, imagine not only you're making your money grow, but you are doing the environment a favor as well, for natural gas is the cleanest burning of all fossil fuels, emitting 60% less carbon dioxide than coal. In addition, it does not leave behind byproducts like ash, sludge, and other particulate matter that are harmful to our health and the environment. On the other hand, this renewable energy helps reduce air pollution, decreasing the chance for disease. Next on the list, a bet on Chinese cars. The Chinese auto market, the largest in the world, has been a major source of revenue for plenty of U.S. car companies. That includes Tesla, which is the biggest player in the country's electric vehicle market, thanks to its Shanghai Gigafactory. However, a number of Chinese electric vehicle startups are poised to challenge Tesla for a slice of that market, including NIO. Compared to Tesla, currently the largest automaker in the world by market cap, NIO is a small potato. The company just achieved the milestone of producing 5,000 cars in 1 month in October. Meanwhile, Tesla is delivering more than 48,000 vehicles per month worldwide. However, when it comes to China's EV market, which is expected to be worth more than $800 billion by 2027, NIO may have some big advantages. In one report, it is said that NIO operates China's premium electric vehicle market. NIO has focused on full-size electric SUVs, an underserved market niche, but recently rolled out its EC6 Coupe SUV, what we'd call a crossover. The EC6 is much cheaper than Tesla's comparable Model Y, and due to its lower cost, is eligible for Chinese government subsidies that Model Y buyers cannot take advantage of. There's certainly no guarantee that NIO will be a long-term success, but as the company grows, it's reasonable to assume that the Chinese government may tilt the playing field in favor of it and other domestic manufacturers. If NIO comes to dominate the Chinese electric vehicle market, an investment now will seem prescient indeed. In general, when it comes to the automotive industry, this is where long-term investors are. Patience is a necessary ingredient for the automotive industry, for it moves in cycles, and the one great chance to achieve that high success happens in that one perfect time. Surprisingly, that perfect time is during a recession, the time when most investors are scared. Let me point out, more than ever, the pandemic showed the convenience of owning a car. Thus, it is not a surprise that people will buy cars generally for safety and security. Now, proceeding to the next topic. A temporary disruption. Robotic-assisted surgery may sound like something out of a sci-fi movie, but the technology is already here and already being used in hospitals around the world. The undisputed leader in the sector is Intuitive Surgical. The company's Da Vinci system primarily performs minimally invasive elective surgeries, mostly in the fields of urology and gynecology. Guided by a human surgeon, the machine allows for more precise and less invasive surgeries, leading to faster recovery times and better patient outcomes. The coronavirus pandemic has been problematic for Intuitive. In the spring, as hospitals began to fill up with patients, many elective surgeries were deferred by hospitals or patients. Now, with cases again on the rise, deferrals are expected to skyrocket once more. And because Intuitive makes more than 70% of its money from recurring revenue, like disposable instruments, accessories, and service contracts for its existing machines, a lack of elective surgeries hurt its bottom line. The good news for Intuitive, and for all of us, is that the rapid development of coronavirus vaccines seem on track to bring the pandemic to a conclusion sometime next year. At that point, robotic-assisted surgeries should resume their prior growth trajectory. In the meantime, Intuitive's shares seem attractively priced for key players in a fast-growing industry. Bottom line: while clean energy fuels, NIO, and Intuitive Surgical could make you rich, it will probably take time. The industries in which they operate, renewable fuels, electric vehicles, and robotic-assisted surgery, will take some time to mature, and as with many developing industries, there's no guarantee that a rival won't steal their thunder. However, if you're an investor hoping to get rich and you don't mind doing research for a calculated risk in your portfolio, these three stocks are all worth a look. If you make the decision to take a step today, one day you'll be farther than where you are today. To summarize our discussion, here's another wisdom from Warren Buffett. The stock market is a device for transferring new money from the impatient to the patient. I hope you learned a lot, or you get an idea or two from today's discussion. Thanks for watching this video. I hope you liked it. Please click the thumbs up button and write your personal tips in the comments below. Thank you for your support, and don't forget to subscribe to the channel if you want to hear more from us. See you in the next video.